Switching gears to that wonderful, it's not wonderful, it was a very solid jobs report. Economist John Lonski is with us now. Okay, I'm calling it a very solid report. How about you?
I agree with you. The economy is all about growth, and this report indicates the U.S. economy will grow rapidly enough to move that unemployment rate lower, increase consumer confidence, and provide, a boost to consumer spending.
To move it lower, it's now 3.8%. You want to move it down, you've got to bring a whole lot of people out of either retirement or on the sidelines or off the couch and get them.
We look at the labor force participation rate for those people between 25 and 54 years of age, and that right now is still 2 percentage points lower than it usually is at this stage of an economic recovery. So there's a lot of people that are relatively young, not even close to retiring, that can be brought into the workforce and extend this economic recovery.
That's pretty strong stuff, isn't it? Okay, man, listen to this. Yeah, I'm sure you've seen this. There's several economists, prominent economists on Wall Street, who are now saying that in the second quarter, we're in the second quarter, April through June, we'll hit an annualized 4% growth rate for the economy. What say you?
Not out of the question. That's mostly because we've had back-to-back strong monthly readings on real consumer spending, March and April. If this continues in May and June, we'll easily hit 4% real GDP growth. But it's up to the consumer. The consumer was quiet at the start of the year. Perhaps the consumer is now beginning to respond to improved job prospects as well as faster income growth.
Got to ask you about trade, specifically Peter Navarro, hardline trade guy, writing in the USA Today. He's basically saying that he kind of likes these tariffs that we just imposed, that it protects our steel and our manufacturing industries. He likes it, and he has no problem if it stays. What say you to that?
For the near term, the biggest risk factor isn't Italy. It's nothing in Europe. It's trade. We don't want a trade war. We don't want to impede, choke off this economic upturn.
Yeah, but does it worry you? I mean, is this a real dark cloud?
I think that the officials in Washington on this matter will come to their senses if the tariffs begin to hurt economic activity. If it becomes a political risk, if it becomes too costly politically, they'll probably change course. Let me say this. Right now, the average industrial metals price is up by 3%, but that's excluding steel. If I look at steel, the price of steel for the year to date is up 43%. We also have some lumber tariffs. Lumber prices are up 34%. That's not helping users of steel and lumber.
You're a bullish guy. I mean, you're bullish on the economy. You've been bullish on the stock market. But I take it that trade, protectionism, as some call it, is your biggest dark cloud on the horizon, is it?
Without question.
Not the Feds, not Europe.
It's not interest rates. And today we see that interest rates are well behaved despite a better than expected employment report. So this is almost a situation where if it goes wrong, we've shot ourselves in the foot.
You know, you've been right in the past about the economy and the market. Well, this morning we're up 185 points on futures. We're going to open strong at 9:30. Where are we going for the Dow?
I think, by the end of the year, where we are right now, we could easily go up 7.5% to 10%.
From where we are now.
Right. And, oddly enough, if we go up 9% from where we were yesterday, that would just bring us back to the record high of January 26th.
Okay. Fine way to start a Friday morning, young man. We'll take that. John Lonski, thank you, sir.